Hello and welcome to Smaulgld. In case you missed it, top gold and silver stories for the week ended June 17th, 2017. Notice a central bank pattern. Central banks worldwide maintain ultra-loose monetary policies, except one. Take a look at some of these headlines. Bank of England leaves bank rate at 0.25%. Maintains government bond purchases at £435 billion and corporate bond purchases at $10 billion. Bank of Japan maintains pledge to keep short-term interest rates at negative 0.1% and rules out reducing its massive stimulus program. Swiss National Bank maintains short-term interest rate at minus 0.75% and will keep bloated balance sheet, which includes U.S. equity shares. Monetary policy remains expansionary. People's Bank of China leaves rates unchanged, injects $60 billion into system, the most since January. Central Bank of Russia cuts interest rates, hints at further cuts. European Central Bank leaves interest rates at 0% and maintains its $80 billion bond buying stimulus program. Then we get this. Fed raises interest rates. Details plans to reduce balance sheet. Now the upshot to all this is it has led to an increase and surge in demand for U.S. Treasuries. Why? Well, just look at what we just read. All the other central banks are at negative rates, zero interest rates. They have expansionary monetary policies. They're monetizing debt. They're printing money and buying equity shares, private corporate bonds, and buying sovereign bonds. And supposedly the Federal Reserve is doing none of those. Fed is in fact raising interest rates and is detailing plans not necessarily to sell off its balance sheet, but to allow some of its balance sheet to kind of just flow off by not reinvesting as their bonds mature. So the Central Bank of Russia and the People's Bank of China were reported in the last few days have been increasing their U.S. Treasury holdings. And there was a report in Reuters that the Central Bank of China is ready to increase its holdings. Top stories during the week: a tragic London apartment fire. There was a shooting at the Republican congressional baseball practice as well. Now, as to the economy, we just mentioned the Fed raised interest rates and detailed its plans to reduce its balance sheets, while other central banks are retaining ultra-loose monetary policies. This is central bank coordination, led by the United States. And you might remember that when ECB first did its QE, it had never done that before. It was done at the urging of Fed Vice Chairman Stanley Fischer. And he had convinced the ECB to do QE, told about the salubrious effects of doing it. Also, Japan announced their own QE program the day after the Fed announced that it was stopping it. This is indeed coordinated central bank action. This is not we don't have currency wars going on. What we have are all the banks that are in the IMF protecting each other's fiat currency and propping up the dollar and the treasury bond as the world's reserve currency. They all have a vested interest in keeping that currency there. Yes, they have individual interests in promoting their own currencies, but they work together to ensure that the system that they have in place is what works. A lot of people are talking about resets and gold. The central banks would love not to have to go through a reset. They would love to keep the current system in place. It's working fine for them. They're making a fortune. And supposedly they have economic stability. So this concept that somehow the dollar is going to collapse, it's not in anyone's interest for that to happen. And you can see the central banks coordinating to make sure that the dollar and their policies coordinated to make sure that the dollar is the world's reserve currency and it is the preferred asset for building reserves. I call it re-dollarization. Central banks around the world have begun to buy U.S. treasuries again. Part of this is because China had been dumping treasuries. They had reduced their overall reserves by $1 trillion in foreign reserves. Their U.S. treasuries were down by about $300 billion. But you see Donald Trump holding off on labeling China a currency manipulator. You also see the Fed raise interest rates. And China looks like they're back to buying U.S. Treasuries. After all, they have a lot of trade with the United States. And also, you see Russia doing the same. Look at this chart here. Russia has really increased its U.S. Treasury holdings, and it does very little trade with the United States. So a lot of people were saying the Fed could never raise rates. They can't raise rates. They won't raise rates. Derivatives would blow up. It's not going to happen. Well, they did. And then the other reason they said they couldn't raise rates was, how can the United States pay the interest on the bonds? Well, the better question is, how does the United States pay $150 trillion worth of unfunded liabilities? How does the United States run a $20 trillion deficit? By issuing more debt. It's Ponzi 101. You don't worry about how you're going to pay as long as you can get new money. Well, how do you get new money? You issue more debt. How do you get people to buy more debt? You raise the interest rates. So that's how you pay the higher interest rates. You issue more bonds at higher rates, and then you use the principal you get to help pay off the debt. Very simple. It's a Ponzi scheme. No two ways about it. But that's how it works, and that's why the Fed is determined to raise rates, has raised rates, and that's why it looks good in comparison to all the other central banks, which now have a license to print money, buy equities, buy bonds, and keep rates at zero or lower. Also during the week, there was a Greek bailout. Again, we won't cover that, but just let you know what happened. And Litecoin, cryptocurrency of the week, or at least of the larger ones, rose about 50% yesterday, and its trading volume exceeded Bitcoin. Quick note on Litecoin. Litecoin is based on the Bitcoin protocol. It has made some changes. In some respects, many say that Litecoin now does what Bitcoin was supposed to do, which is able to make transactions cheap and quick. And apparently Bitcoin has not solved its scaling issues, and Litecoin apparently has. It's done the segregated witness. It's done a fork. That some people, it disturbs some people. Other people, it gives them confidence that the coin is working as it should. In any event, according to the coin market cap, a lot of this trading happened in China. Chinese exchanges, Korean exchanges. Looks like Litecoin was, quote, undervalued compared to other cryptocurrencies, so people jumped on Litecoin. Another chart of the week, there's your JP Morgan Chase silver stocks. Look at that. It's up to 110 million ounces of silver. This number, the registered stocks, hasn't changed in 2 years, I think. So most of the silver that's going into the JP Morgan Chase COMEX approved depository, where they have those COMEX approved bars, they're not Silver Eagles, they're not Canadian Maple Leafs, that's just going in there and is not being registered for sale. Who knows whether it is held on behalf of clients, whether it's JP Morgan's proprietary holdings, but whatever it is, it's not being registered at the moment for sales. What's this say here? You can buy Bitcoin, Ethereum, and Litecoin through Coinbase. Yes, if you're interested in doing what I would consider gambling, I mean, some people are convinced that these things are the future. It's not investment advice, but if you want to try your hand at investing in cryptocurrencies, you can do so through Coinbase. You open a Coinbase account, you get $10 worth of free Bitcoin if you spend $100 on it, and I get $10. That's one way of helping out the site. I would say, unless you've done your research, unless you've done your due diligence, that's what you want to do. Do it. If you want to help the site, don't open a Coinbase account just to get $10 for Smaulgld. You can donate $10, or you could just hold on to your $10. I'm not advising you to go out and trade these things, but if you are going to, it's the same with what I say every week. If you're going to buy gold or silver coins, not investment advice, please consider doing so through the Smaulgld site, because I get a commission, but I'm not advocating you buy cryptocurrencies or gold or silver. I'm only saying if you do intend to buy them, please consider using the links on the site, because you pay no more nor less than if you visited those sites directly, and I get a small commission. If you're not interested in buying anything, cryptocurrencies or gold or silver, you can consider a donation, or you can just continue to listen and support the site with your comments. All right. Now, what happened? Gold and silver. Last week, gold dropped about 1%, down to 1253. Silver dropped to 1668, or about 3%. Here's your 1 month gold silver ratio, over 75 to 1. Just note the 5-year gold silver ratio. I recall in 2013, 2014, and 2015, all of the silver pumpers saying this is unsustainable. The gold silver ratio is at 50. It should be at 16. It should be 1 to 1. Silver's so useful. Silver's rarer than anything else on the planet, and it's got to go lower. The ratio's got to go lower. It's unsustainable. Switch all of your money from gold into silver. Okay, maybe one day they'll be right, but for the last 5 years, that has been wrong. Probably even the statements are wrong about the value of silver. But in any event, I just want to show you this. This just shows you that the gold-silver ratio has gone in the exact opposite direction as the silver pumpers have been saying it should be going. And they're still saying it's going to go lower. It has to go lower. Historic opportunity. Again, we'll see. All right, what else? This is stunning. Okay, so I tweeted this out on June 12th, but it hasn't changed. The U.S. Mint, well, it changed a little bit, had yet to report any 1 ounce American Gold Eagle sold in June. The sales at the U.S. Mint in June are horrific, not just for gold, but also for silver. I think they've only sold about 400,000 American Silver Eagles so far this month. Normally, for the last few years, I report almost every day on the updated sales that the U.S. Mint puts out, but they don't put them out anymore because they're not selling them now. Some people say, well, they're lying. That's not true. I have to say, first of all, there's no reason for the U.S. Mint to lie about this because hardly anyone follows it. But on the Smaulgld site, I normally have a few sales each week. Not a lot, but I rarely go for 4 weeks without having any, and that's what's happened for the last month. I haven't had any affiliate sales, gold or silver, in any amount on the site. The site's got the traffic. It's not, in fact, we'll talk about in a second. Smaulgld was mentioned in Zero Hedge, so that drove a lot of traffic, but traffic's been about the same, but the sales of gold and silver are just not there. So that ties into my anecdotal evidence with what the U.S. Mint is saying, that sales have dried up, and I think a good portion of that is this crypto craze that is sweeping a lot of the gold and silver bugs because they see for years their investment in gold and silver going nowhere. Not that it should go anywhere, and basically it's silver speculative, but gold is merely a store of value. It's not meant to skyrocket. But these cryptocurrencies, if that's what you want, they're designed to be speculative. Well, not designed to be speculative, but they are indeed speculative. And they can, quote, skyrocket, and they can also go to zero. Just a note here, gold has never forked in its existence. We hear about Bitcoin possibly forking. We hear about the old fork in Ethereum a year ago. These are issues with cryptocurrencies, but, gold doesn't do that. So that's just another plug for the store of value for gold. You could talk about limited amounts of Bitcoin, two totally separate things. Bitcoin exists on the blockchain. You have your keys to it. It's not the same as owning, and it's not anything in particular other than a bunch of digits. So I don't want to get into a debate over gold versus Bitcoin, but they are two totally separate assets. I don't buy the argument that Bitcoin is a store of value. I buy the argument that Bitcoin is a means to transact. It has an infrastructure. It has a system. Gold has no system, has no infrastructure. Gold just is. It's immutable. Bitcoin is, in a sense, ether, but that's what Ethereum is. It's ether. All right, let's look at the top stories during the week. Shanghai Gold Exchange withdrawals fell in May, but they were still robust. This is another point to make about the gold market. Shanghai Gold Exchange withdrawals are very strong, robust. Indian gold demand has been strong all year. It doesn't reflect itself in the price, but compared to the U.S. Mint sales, night and day. Now here is a article I mentioned got picked up in Zero Hedge. Bill would require declaration of digital currency holdings at the border. I'm not going to go into it. You can click on the link here. You can check it out on the YouTube channel. But fascinating bill that the U.S. Congress Senate is trying to pass with Dianne Feinstein and a few of our other colleagues, bipartisan, Republican and Democrat, trying to figure out how to stop cryptocurrencies from coming into the U.S. and funding terrorism and money laundering and the like. Silver, how four Irishmen found the largest pot of silver ever known in Nevada. Interesting story there. So I'm going to send this over to Salivate Metals. He does a good job. He likes to cover these types of stories of interest about gold finds, silver finds. I sent him one on a Roman find of gold in the Netherlands. He covered that. I think I'm going to send him this one. Story of Germany bringing the gold home. Economic data, not good. And this flies in the face of Fed raising rates. It's not that the United States economy, if you use the normal rationale, you need to raise rates because the economy is taking off. Well, that's not true. Look at this. Inflation is low according to the way they measure it. And the rest of the economic data this week wasn't very good. So I don't know why they think they're raising rates. Well, I do know why they're raising rates. They're raising rates because they want to stay ahead of the curve. They want to make sure the Fed is the one bank that's paying interest. They want to give themselves some room to cut rates when the economy turns further south. So that's what they're doing. China's issued treasury sovereign bonds overseas. Okay. New leader named for long-awaited Texas gold depository. Here's a gold cryptocurrency, OroCrypt, that's going to be introduced. And Russian central bank group prepares for master chain Ethereum fork for testing. So Ethereum is really taking a lot of attention from a lot of corporations, and sovereign nations are taking a good look at Ethereum. There's your little bit of reporting of gold and silver sales at the U.S. Mint. There's your links and your banners to buy if you're so interested. Here's I mentioned, Indian gold imports continue to surge. There you are. Those 3 nice months of almost 100, averaging about 100 tons a month into India. There's a London fire reference and congressional baseball shooting. CCPI lower than expected. Retail sales down. Auto sales, retail sales minus autos down. Business inventories down. These are not numbers that indicate a robust economy that's growing. It's solid and need to raise interest rates. Here's one. Copper demand. A lot of people trash copper. A lot of people say copper demand is on the way down and therefore silver is not going to be mined because they're not going to mine copper. Well, copper demand is going to rise 9-fold from electric cars. Also on that day, Fed Reserve on the 14th, Fed raises rates, detailed plans to reduce balance sheet. Here, silver imports in India rebounding sharply. So silver demand on the increase outside the United States. Just some quick point. Here's the links to the article. Swiss National Bank not going to they're not going to tighten their policy. China stand pat on interest rates despite Fed hike. Bank of England comes close to voting for rate hike but didn't, and they held their rates back at 0.25. Russia cuts rates. Bank of Japan maintains hyper-loose monetary policy. All the headlines that we read above. Initial claims, all this, you can look at this. Industrial production flat instead of up 0.2. Here's the article on re-dollarization, also the YouTube that goes with it. And also now they're saying, I reported on April's official Indian gold import numbers, but now they're saying that May's provisional numbers of gold imports are surging 3-fold. So robust demand for gold and silver overseas. Silver imports, they're saying here, also grew in India. Housing starts down, housing permits down, University of Michigan consumer confidence sentiment down. Yeah, they raised rates. There's the Greek bailout, and I mentioned Chinese holdings of U.S. Treasuries rise to 6-month high. Here was a new Smaulgld feature, which is the Smaulgld speculation series. Question was, about cryptocurrencies, are they fiat killers or will they be strengthening the fiat system? The real question is, will these crypto assets be subsumed into the banking system? Now, the purpose of cryptocurrencies they are peer-to-peer, decentralized. So I buy Bitcoin, I then use Bitcoin, I transmit it outside the banking system to someone I'm transacting with or some merchant I'm transacting with, and the banking system never sees it. Well, there's applications now using Ethereum, one called 10x, that will allow people to put all their crypto assets into this system, and then they can spend them in the system through a type of MasterCard or Visa card. Well, that would defeat somewhat the purpose, although it would increase the usability of crypto assets because not every place is going to accept Litecoin. Not every place will even accept Bitcoin. But if you have this system where you can load your blockchain assets onto one card, then you can spend them. So we'll see where that goes. And that's about it for the week. Thanks very much for listening. Remember to subscribe to this channel. Give it a thumbs up if you like it. And subscribe to the Smaulgld website. Thank you very much.